Okay, welcome back to our channel, guys. Thanks for tuning into another video. Today's video is going to be a Bitcoin update. We have a lot to talk about. We are going to try and get through it nice and quickly though. We do have two videos coming out today. One later on in about 12 hours, which will be our altcoin video, and of course our Bitcoin video today. So diving right into it, guys, we did have a pretty strong rejection from that $32,000 region. We talked a lot about $32,000 being a major point of contention on the chart, so major area of resistance, calling it our trigger point. And our trigger point was, in fact, the resistance which would allow us to move upwards here from 32K into this higher range. And we talked about how that was a possibility. It seems though, however, Bitcoin has not been able to close a daily or weekly candle above that level. If we go down to the macro time frame, I just want to quickly flip over to this chart here. We can see that red line is at $32,000 region. We had that local low here. We were not able to flip that level. If we flipped that level, we would have pushed a little bit upwards to about 36, 37 for that initial target, but unfortunately that has not happened. We have rejected. Now, however, it doesn't mean we cannot retest it. I think this is the kind of scope we want to go ahead with today's video. It is saying that as long as we are between this support and resistance zone, this red line, this gray box, and this gray box here, we are kind of in a range. And while we're in a range, we are still not really making a decisive directional decision. Although on the short-term time frame, we got rejected and headed down, we're still finding a lot of support at this level at the bottom. We still have a lot of support down over here, and until we lose this level, and I mean talking about this level here, the $28,000 level, unless we lose $28,000, we have to assume we still have the possibility to retest 32K and continue up as per what we talked about in our previous video. However, if we do lose $28,000, we will see the price go lower down. So not much to go over on the shorter term time frame today. We're not going to do much of analysis. It's more about our market analysis technicals. We're not really going to worry about today. Just finding out the most important thing on the chart, which is first and foremost, a very strong support zone at around $28,000 to $29,000. Very strong support, and a very strong resistance upwards around $32,000. All right, so if we break below $28,000, that is when you should be worried. That is when we would expect lower targets. So we're talking 24,000, we're talking potentially even lower. And of course, if we break above 32 and we get the daily close, it's a daily close, guys, daily close, we can expect higher targets of about $26,000 to $28,000. Okay, very straightforward, very simple. Let's take a look from a different perspective. So we can see this chart over here. This is our macro chart. We can see on the Bitcoin chart over here, we have our two descending diagonal trend lines, which are the solid lines, which represent a descending channel. We also have our overlay descending channel, which are dotted lines. We essentially have two descending channels overlaid on top of each other, one at a slightly different angle. And what it's suggesting is that we're moving downwards in this tight consolidation, and the consolidation zone, as we can see, is getting tighter and tighter as the periods move along, because we have this expansion between our two trend lines, which are dotted support, our dotted resistance and our solid resistance, as well as our dotted support and our solid support that are expanding. So we have this downward channel with increasing, I would say, what would you call it? Pressure. I would say pressure between our upper dotted resistance and our lower dotted support. Now, as we can see, this is our range. Between the dotted and the solid is our range, all right? Between the solid resistance and dotted resistance, this is our take profit zone. And between our dotted support and solid support, this is our entry or our expected bottom zone. And we've seen this happen a few times on the chart. We saw a very strong bottom over here. We pushed upwards through, came into this upper range, got rejected and continued downwards. We're seeing a similar thing occur over here. We found support on that solid trend line, pushing upwards, potentially leading into this upper range. And of course, the upper range, we have this downward trending dotted resistance, which is around 34,000. And we have our target range, which is at 36 to 37,000, potentially 38,000, but more or less 36, 37,000 within this range. So there's a lot of supporting evidence on the chart if we're just talking about a directional analysis and just looking at the market, but you can see that the price can potentially move upwards into this range before rejecting again. And we talked a lot about the bullish case scenario. I think we're going to go ahead and talk about at the end of the video what actually needs to occur for us to become bullish again on the macro time frame, and we're going to talk about how low the price can go, but we'll come back to that at the end of the video. I did want to talk a little bit about this chart over here, and we'll come back to this one again at the end of the video when we do our community questions. We've got a lot to talk about on this chart, but we can see that we did have this weekly low, and we do need to flip that weekly low to kind of get any move upwards. That weekly low is sitting on $32,000, which of course confirms the fact that it is in fact our major trigger line. So moving forward, we do have our log scale over here, and this is our inverted log scale. We can see Bitcoin is found a little bit of resistance at that trend line there, but has shot downwards. It's indicating if this candle can flip back over this trend line, we can see it push downwards for the price. All right. Finally, Bitcoin dominance is looking like it's finding a little bit of resistance over here. Of course, it looks like it is losing some pressure. It can retrace here. Again, losing this low, this red line will result in a push downwards. Until then, we have to expect a move upwards into this resistance range. But we are, again, between a very tight resistance range and a very strong horizontal support, and a directional move is pretty imminent for Bitcoin dominance. I don't think it's going to shoot much higher. If it loses this red line, it will retrace altcoins to see a little bit of a rally. And of course, DXY, we're going to come back and talk about that in a second. Before we get into the rest of the video, and the rest of the video will kind of go over the recent implications of the Fed's balance sheet reduction. We're going to talk about that on the DXY. We'll go over a whole bunch of questions. We're going to go ahead and bring them up over here. What would the actual bottom be? That's a good question. We're going to talk about the strategy I use and follow when it comes to macro market swings, and how I actually tackle altcoins, the alt market, the Bitcoin market, in the bull market and bear market, and what would I consider a macro reversal. So we're going to get into all that in a second. I'm just going to quickly introduce Bitget. I wanted to quickly introduce my new favorite exchange, Bitget. Bitget is a non-KYC exchange, which is particularly beneficial for members in the UK and Australia who are limited by certain trade restrictions. Bitget has 250 plus spot trading pairs, as well as 60 plus leverage trading pairs, up to 125x leverage. Sign up now in the link in the description using our referral code to get up to $153 in rewards for completing 4 separate tasks. Let's go ahead and dive back into the video. Okay guys, so we're going to start talking about the DXY and the Feds, and then we'll come back and talk about the rest of the Bitcoin chart and all our predictions. So to start off guys, we talked a lot about the DXY in the last few months, and well before this even broke upwards, we were talking about, back in December, we were telling you guys that, you know, we can expect a break upwards here on the DXY, and we saw a very significant push from around 95 all the way up to, you know, around 105. And we talked a lot about, I guess, this concept over here. I'm going to zoom up, I hope you can see it nice and clearly, which is kind of what the global economy was facing at the time. I'm going to quickly reiterate what this means, how it works, and then we're going to go ahead and talk about, you know, where we are now in this cycle, what is occurring now, and how this is affecting the market. So first and foremost, we already know we had huge inflation. Inflation has been increasing massively over the last few years, and really we've reached this point now, or like I would say a peak point, where we've kind of peaked in inflation just for the last little bit. I think inflation will continue upwards a little bit, but for now, a point of interest where obviously it's now a very big point. We're talking government and fiscal policies and monetary policies, and different world governments and institutions and agencies and etc. are actually worried about inflation now and interested in inflation. We've actually seen it now affecting our day-to-day life. So of course we had this period where inflation was high. The response was to increase interest rates, and we've seen that now. We've seen an initial increase in interest rates, and the next one, the FOMC, is the 16th of June. We expect those to come up even higher. And of course, with the interest rates rising, we've seen an increased interest on debt. And of course, if you have debt obligations, your repayments, your interest repayments will be increasing, whether you've got a mortgage, whether you're a company or a government who has acquired assets on credit, you're going to be paying more debt now. And of course, this has led to 2 different things, number 1 and number 2. So starting number 2, we've had lower household available cash. And obviously with interest rates rising, most households have a mortgage or debt obligations, whether it's car loan, house loan, whatever. They're spending more of their available savings or available inflow, and it's going into outflow, it's going into paying these debt obligations off. So less cash. If they have less cash, either they can't invest, or they invest less money, they have less available expenditure, as well as the fact that when they have less cash, generally some households may be pushed on budget and may be quite tight. They might have to sell some of their assets to actually finance these debt obligations. And that's what we're seeing. We're seeing retail selling assets to finance its debt obligations, and it's exacerbated by the fact that the cost of goods are also rising. Cost of goods and service are also rising along with interest rates. So you have this double whammy effect where cost of living is increasing and the value, the buying power of the dollar is decreasing. So it's creating this situation in almost hyperinflationary or stagflationary, where the economy is crumbling rapidly. And if they didn't make a difference, if we're not putting any implications or putting any strategies to reverse this, we're facing a global economic recession. We've told you this for months, guys, and it's not new news on this channel. We've been talking about it a long time now. So interest rates rising is an absolute necessity. Number two, we'll come back to this in a second. Another necessity is that we stop printing money, or we reduce our printing of cash, our supply. We start decreasing it. And obviously the federal budgets aren't showing any signs of slowing down. So we know that we have this contradictory response, which is increasing interest rates, but inflation, or the driving forces behind it, which is causing inflation, isn't slowing down. So we've got this I would say stagflation kind of response, where interest rates rising, cost of goods rising, and it's just getting worse and worse and worse for particularly citizens and consumers of this economy. Number two, and this is kind of where leading on to this one today, which is interest on debts obviously rise, interest rates rise, companies have to sell their assets. And the reason why is because companies acquire a lot of risk assets when the interest rates are low. And we've had very low interest rates for the last couple of years, but particularly before COVID and just during COVID, interest rates are very, very, very low. And it was a perfect opportunity for companies to acquire these assets, whether it be cryptocurrency, a big one, whether it be stocks, equities, bonds, or whatever you want to be acquiring, or even real estate in some countries. These companies have been purchasing, and governments included, purchasing assets on credit, real low interest repayments. Now that interest on debt is rising, their available cash flow is moving into these repayments. Their debt to repayment ratio decreases, their future cash flow decreases, their future earnings decrease, therefore the health of the company decreases, and people start selling these shares. They offer lower premiums. So we've seen assets, particularly share prices of companies, fall pretty heavily, and this is exactly why they've fallen. There's nothing else to it. This is why they've fallen. So in response, companies also start offloading their assets. So they start doing runoffs, which we'll talk about in a second. So either runoffs or just selling assets, selling shares altogether. And this is to increase their balance sheet cash flows. And this is what we want to talk about today, because the Feds have announced, and we're going to come back to another one, that June maturities held by Fed are maturing in June. So they have a lot of securities. Obviously, the Fed has trillions of dollars worth of assets, and they have a lot of securities which are maturing in June, and that is totaling 48.25 billion. And we can see over here the 15th, 30th, and 30th, they have 14 billion, 13, 15 billion ECT maturing around this date. And they're saying they're not going to be reinvesting these amounts upon security maturing. So, and I think it's, sorry, my neck is a little cracking. I just want to reiterate, this doesn't mean that they're selling those securities. And I think this is what a lot of people get mixed up from. It doesn't mean they're selling these securities. What it does mean, it means instead they're letting these bonds roll off at maturity, and that's why we call it a runoff. So you call it a runoff, you call it a roll off, that's what it is. And they're not reinvesting the principal repayments. What does that mean really? Well, it means they're not reinvesting their principal repayments, and thus they're reducing exposure of risk to the market. They're reducing their risk in the market. I hope that makes sense, guys. So that's kind of what we're seeing here in the global situation. And of course, interest rates are rising. It's only going to get exacerbated. It's only going to get worse. This is going to become a bigger problem moving. Sorry, just going to readjust my camera. A bigger problem moving forward, particularly for asset prices. So we've talked a lot about that. I don't want to go into it too much more. We're going to go ahead and dive right into some community questions. And I think our community questions, if we scroll down a little bit over here, here we go. Okay, what will the actual bottom be? Is there any chance Bitcoin will go below 15K or 10K? So we have to go back to this chart over here. I'm going to zoom out to this chart, because this is our chart where we talk about, the macro direction of Bitcoin, where we can really see the price headed. And we've talked a little bit about the short term, and I'm just going to quickly, before I answer your question, just reiterate the short term. For us to see any short of reversal in the short term, we need to break 32K. If we daily close above 32K, it will send us up over here. All right, and we'll talk a little bit more about our macro reversal in a second in the next question. But moving back to this way, if we lose this dotted trend line, we will expect to see this weekly candle come down to around the 200-day moving average. Now, of course, the 200-day moving average has acted as a major support throughout the entirety of Bitcoin, and we're talking about, the 200-day moving average, guys, way back in November 2021, telling you that the price is going to head down. No one believed us, and it doesn't matter. For those of you guys who are listening, congratulations, we did predict this entire move well before anyone else. A lot of other analysts jumped on our bandwagon. I know a couple other close analysts picked up what we were talking about and kind of put their own spin on it. But yeah, 200-day moving average was a very clear target. And I think anyone who was looking at the data correctly would have seen it instead of calling for 100K. Anyway, moving to 24K target, and then obviously we have this upper trending solid line, which is sitting around 15,000 to 18,000 with the current price action of 16,000 to 18,000. You're asking, will we go below 15 to 10K? We're going to quickly go ahead and indicate where those levels are. 15K here and 10K over here. So we're going to go ahead and just want to drag these across real quickly just to see historical price action. Now, I don't think we will see these levels, and the reason being is because for us to see these levels, we will have to break downwards of a 9-year long trend that we've held consistently for Bitcoin for most of its known life cycle. So I don't think we're going to lose these levels, and I definitely don't think we'll see anything lower than this solid black line here. We've never dropped below it in the past. I don't think we're going to do it in the future. Now, the question holds, what happens if we do lose this level? Well, if we do lose this level, yes, we could 100% see 1510K. If we lose this level, our entire trend, all the data we have compiled, is now out the window. We don't know what's going to happen. It's going to be completely new. It could really react in any. I can't even tell you guys, if I'm being honest. I can't tell you what can happen. I'm basing my analysis off the trends, off the data we have, and off the market patterns we have had in the past. I'm a technical analyst. I use historical price action to predict a future price action, and of course, we don't have any historical price action that relates to this price range over here. We of course do have small ranges in this range, but if we take a look at the grand scheme of things, we really only have 2 months, 1 month, maybe 3-4 months in this price range between 10 to 15,000. Not much. And saying that, that's below our long-term uptrend support. So I would say to your question, do I think the price will head down there? No. I think a lot needs to happen before that occurs. And I think if we do lose this trend line, I don't even think you should be worried about 10, 15, because who knows where it could go from there onwards. I don't think those will be optimal buying points. If we lose a macro 9-year long uptrend, I don't think buying a 15K will be a very good option. I think we could go much, much lower. Moving on. You mentioned about strategy you follow. Can you please elaborate in more detail? So I did talk about this. I'm trying to find the picture. Here we go. The image. I'm going to go ahead. I think I can bring this one up on screen. And I talked about this in my VIP, of course, and my free channel. And the game plan says November 2021. So we told you it was just to use a small amount of our portfolio to scalp until the macro trend flips. We'll talk about macro trend in a second. When the macro trend flips, purchasing 10 to 30% of my capital in Bitcoin, saving 50% on capital on the sidelines of swings, and obviously the rest on the sideline just waiting to buy dips or ECT. I rotate out of Bitcoin into altcoins after the first top. I'm going to show you that in a second. And then I go more into altcoins. So if we go to a Bitcoin altcoin chart, I'm going to quickly go ahead and bring that up. Let's go trading view. We'll bring up a Bitcoin chart. And we'll go ahead and bring up a altcoin index chart. Cool. All right. So if we go to the daily chart on both these charts, I'm going to show what I mean. So daily chart over here. Zoom out, we'll go back to around over here. So we have our 3-day, so we go 3-day. Cool, all right, cool, there we go. So we have this initial bottom. So here's our absolute bottom over here, guys. You can see that kind of lines with that green line. For altcoins, we saw a 544% rise from the bottom. For Bitcoin, to our first top, we saw 900%. So when I say my first initial purchase is Bitcoins, I ride Bitcoin primarily into a first top, which is over here. Then I sell all my Bitcoin and I go into pure scalp trading or swing trading with altcoins onward. So from this initial bottom, I will purchase 10 to 30% of my capital in Bitcoin. I leave 50% for purchasing and swing trading altcoins, and I leave 30% on the sidelines to either reinvest in Bitcoin on dips or to buy more alts or whatever. All right. And the reason my percentage of portfolio in Bitcoin is quite low is because I'm primarily a scalp trader and a swing trader. I have more confidence in my ability to make profit trading than I do just holding a coin. I don't really like holding. For some people, you may be putting 50% in Bitcoin at the bottom or higher percentages of Bitcoin depending on your risk tolerance, depending on your skills and your ability and your confidence in being able to make more profit trading. So when that first top comes in and that drop, that is when I sell all my Bitcoin in this drop over here, whatever profit I'm at there, and then I move into altcoins. So you can see from that point onwards, altcoins did 400% rally, where Bitcoin only did about 100. So from this point onwards, I have the majority of my amount of money in altcoins, if not sort of swing trading altcoins, always leaving about 30%, 20%, 30% of my capital on the sidelines at any given time to leverage in positions or increase exposure, scale in, scale out if needed. All right, so I hope that answers your question. Next one, we have, what would you consider a macro trend reversal at this stage? So we did a little reply over here. We said macro trend reversals are not the bottoms. So it's a very good distinction over here. The macro trend reversal is not the bottom. The bottom and a macro trend reversal are completely different things. Macro trend reversals happen after the bottom, higher up, because at the bottom, we don't know it's the bottom until after. We don't really know the price is the bottom until hindsight. Technical indicators are always lagging when it comes to predicting bottoms. They're horrible at predicting bottoms. They're really good at predicting tops. Bottoms, not so much. So I've already said that the macro reversal, we need to see a break over our midline of our Gaussian channel, as well as clearing the high over here, about $48,000 on the daily candle, finding support and pushing upwards. If that occurs, that would be our macro trend reversal, a macro swing, and we expect the prices to move to all-time highs, or at least new high levels. All right. I hope today's video has been helpful, guys. If you have any questions, leave them down below, and I'll catch you in a video later today. Cheers.